Good morning, everyone. I apologize for the delay. Having some computer issues. Well, not issues so much, but my system's a little tardy here this morning. So as we wait for that to load up, wow, it looks like we made it all the way up to 6,900. So yesterday turning out to be a rather bullish day, because when we closed up shop, we were hovering closer to 6,700 than 69. Come on now. It's funny, the hawk is always the last to load. I don't know why that is. I don't know if it's that way on your system. There we go. All right. Let's get the trade manager applied. All right. Okay, all set. All right, let's take a look here. Normally I try to review this before I open up the room, but the overnight actually looking very choppy still. This was the big move. And look at how quickly that unfolded. My goodness, you'd have to be on your game there. The last half hour of trading, the market rallied up, and then there was this rather large rally here in the afternoon session. That's a little unusual. We don't usually see, excuse me, we don't usually see the market quite that busy in the afternoon, but it certainly was yesterday. And just looking here at the Eagle, this was our first in-sync Eagle signal. So yet another day where that first in-sync signal paying off very nicely. In fact, it could easily be your day right there. Yeah, way to go, Mark. Mark says, despite the dismal morning yesterday, I did some afternoon trading and picked up $990 on 3 trades. This morning, I bagged a pre-market late filter entry for $300 so far. Let's take a look here at the Falcon. Might have been this one right here, or let's see if there's another one. Oh, that's kind of getting in the overnight. The late filter entry is a signal unique to the Falcon and a very high probability signal. It occurs when your filter goes out of sync, comes back into sync. Your trend line, however, never changing color. And it's usually good for at least your high probability profit objective. Looks like that one wasn't good for a whole lot more. Kind of turned its heels after finding the profit target. That signal will be most times replicated on the Raptor. You Raptor traders don't need to feel like you're left out. Where was that? It was not this. Oh, actually, the number 1 signal printed a little bit before that one. I think this was the late filter entry. So it was actually one of your discretionary signals. Okay, we're kind of in a bit of a sideways drift again. This afternoon we've got the FOMC minutes released, I believe. I'd better double check that. Yes. But it won't be until, I think, after the market close. Oh, no, it's near the market close. Yeah, so their usual time. All right, a little bit of a bounce up, but we are getting some signals here to be sure. Here's a nice little first micro macro cross on the Hawk. Here's another trend change signal on the Falcon. It is still opening range though. We're only 9 minutes into the day. I'm a little leery about opening range. I know not everybody is. This was the daily chart now. And yeah, we certainly blew well past 6,800. That was not even a problem. So if we draw a bit of a trend line here, it looks like the next stop could be 7,000 or thereabouts. You can see we've had 3 rather strong bullish days, especially yesterday. And that does bode well for the buyers. What's likely to happen from here is we're likely to see a test of the trend line, maybe even a little bit of a break. Then we'll have a few days where the market will retreat, probably getting back down maybe as low as 6,700, maybe even 6,750. That's going to be do or die time for the bulls. If this is going to turn into an uptrend, the buyers will have to recover it somewhere, looks like around 6,700, maybe even as low as 6,650. But if they do recover it, well, then we can just start buying with both hands, because chances will be very strong that the market will try to head higher from there. So there you have it. Your next couple of weeks trading outlined for you if the market behaves the way it's supposed to. And all that is just a looking for a test of the extreme, right? We're going to be looking for prices to test resistance. We're going to be looking for a test of the extreme. And if we get those things, well, then the market tips its hand to us, and we know which way it's more likely to go. All right, a little bit late on this number 1 signal. It looks like the number 2 signals, both of which worked out very well. We do have a second push opportunity on this number 1 signal. It's a little bit drawn out, to be sure. But all we would be looking for here is some renewed momentum to bring us into the trade. I think I'll close that for now, though. Oh, here we go now with a number 3 signal. Geiger counter is a little bit on the bullish side, so I may look for a second push entry rather than get too bullish at this point. Oh, here we are back down toward the lows now. All right, so the second push entry, all that means is we allow the signal to engage, we see where the market reacts, and then we use that zone as our entry price. Now, actually, the market's in a bit of a bind here. I was going to say, here's a number 2 signal. We could look to buy off that number 2 signal. Because we've got a test of the extreme now. So I just punched in with a buy order. I didn't get too much slippage there, thank goodness. And, oh, I guess I should get my stops going. There we go. We're at break even. And perhaps even a little bit of a runner. Maybe. All right, maybe I'll move into the parabolics. The parabolics have the nice feature that as the trend progresses and it slows, the parabolics actually get a little bit tighter, thereby enabling you to perhaps protect a little bit more profit. All right, not bad. Had to be a little bit quick on that one, but pretty good little trade all the same. Better start than yesterday. My goodness, yesterday. You know, it's funny how you're going to find that certain days will suit you better as a trader. Not all days are created equal. I had a fellow write me yesterday. He said yesterday was one of his most profitable days ever. And it was the day that I truly struggled with. So, yeah, it's funny how, like I say, certain days, I don't know, it almost just seems to suit your eye better. You see things a little more clearly some days than others. Okay, here come the sellers again, and it looks like we've got a really broad sideways trading range. This whole chart is a sideways trading range. All right, here we go again with perhaps a run now to the short side. We did get a nice little trend change signal up here on the Falcon. Looks like it hit its profit objective. Those first micro macro cross signals on the Hawk still performing very nicely. First micro macro cross signal right here. Another one right here. Another one back here. Easily finding your scalp targets. Another one right here. Wow, actually really good follow through on practically all of them. First micro macro cross, one of my favorite high probability signals. Because of its reliability. All right, here we go. Perhaps another run here toward the lows now. Another attempt at a breakout. We got to be careful with these attempted breakouts because there's a good chance that one of them is going to be a fake break. So a run here at the lows does have the potential of being a fake break. Oh, I was going to try actually to get on board this one here because it was the second push on the number one signal. How are we doing here on the Eagle? Have we broken? Oh, we have. We've broken through the bottom end of the lows. I don't know how aggressive I want to be on this. You could throw an order below here now that we've seen the breakout. I don't know. I'm a little bit nervous about that. Let's see if we get a little bit more of a pullback, maybe a hard edge bounce. If I get a bull bar in the Eagle, I'll be, there we go. There's one. Give me another one. There we go. Okay, so we got a couple bullish bars in the Eagle now. If this was the bottom end of our trading range right here, we've got the breakout. You can throw your just in case order below there. The logic now is that we've seen the breakout. This now is the retest of the breakout. If the breakout's going to hold, if the market's actually going to continue lower, well, it's going to have to take out this low, isn't it? And if it drifts too high in here, then it voids the breakout or will tend to void the breakout. Here we go. The Hawk's already bullish, as is the Falcon. The Eagle and the Raptor still both bearish as we get into that hard edge of the trading band. And we're drifting a little higher. All right, well, I can pretty much scrub that short order because it does look as though that breakout did not take. A fake break, if you will. if I halfways identify a sideways range, something like this, maybe I'll extend it a little bit like that. It's going to be a little tricky here on the top end. Waiting on the number one signal here in the Raptor. The cloud's almost fully crossed. In fact, the next signal you could treat as an early number one signal. It won't print as a number one. You'll still get your warning dots, your triangle hash mark, but because the clouds are not fully crossed yet, oh, they might be by the time the signal prints. All right, let's put that away. Now we're drifting back toward the middle of the trading range, so we're very, very neutral. Trading ranges are tough because there's always selling kind of in this top third, top quarter, buying down here, the middle remaining very, very neutral. Good follow through on this number one signal, and darn it, too late to get my order in. It just kind of hopped right past me, but a good little, looks like it's going to be a good little buying opportunity. We got a discretionary signal in the works. Oh, well, the warning dot anyway. I hate it when they do those quick little hops like that. You gotta give me a chance to get on board here. Play nice. Oh, actually, I guess there was a 4-arrow consolidation here in the hawk that I missed. All right, here we go. We got our discretionary signal. I can set up for that. I'll take it above the high, cover it down here. Just looking for some bullish follow through. Obviously, there's some selling going on here at 6,900. Wow. No follow through. All right, well, let's close that up. And we'll put that back on the shelf for now. Let's see how our sideways range is building up. Oh, well, we looks as though pretty much have it nailed. Trying to make a higher swing, actually producing a red bar buy signal. So right now the eagle looking a little bit more bullish. You can see our filter, the bearish pressure diminishing. We'll see whether the buyers can change that. Oh, wow. So much back and forth again today. Very, very similar to yesterday's morning session. So much back and forth. Well, they seem very content to keep drifting sideways at this point. Although we are seeing some signals follow through. Here, another first micro macro cross. All right, here we are now at the top end of the trading range. There was our breakout. So we can do the same thing as what we were looking to do on the bottom end. And we can throw in our just in case order, just in case the market decides to bolt and resume the uptrend. If there's another swing in here and another failure, I may try to get a little bit more aggressive and actually look to short. The challenge today is to avoid picking up a trade too early. Oh, thanks, Floyd. Floyd says if you look at a 5-minute ADX, it's still below the 20 zone. Here, we'll build one of those for those of you who are saying, what the heck is that Floyd fella talking about? All right, so if we take just a regular time-based chart, and it's fine to do this, you know, sometimes a time-based chart can give you a better look at what the market is doing, especially in these kinds of days, you know, where we're really sideways with the mean Rinkos. As soon as the range of the bar is fulfilled, of course, we're going to print another bar. And so you can end up seeing a whole lot of bars and not really having an idea or perspective on the market. So a time-based chart can be very helpful that way. The ADX is a non-directional indicator that tries to give you an idea as to the strength of the trend. And it's going to look like this. Stop it. There it is. Okay. Is that right? Did we just have a... Why is that not displaying correctly? Oh, I guess on the... No, that's not right. What's going on here? Are you looking at the 5-minute, Floyd, or are you looking at the 30-second? Because I know you like the 30-second as well. So let's take a look at the 30-second chart. Or maybe it was a minute chart. Ah, there we go. This is probably it. All right, so your ADX is below your threshold line, which in this case is 20, which tells us there's no trend. One thing, if you're following the ADX, that you need to be aware of is that it is a non-directional indicator. So even though the indicator is rising, in this case it's rising because prices are rising, but what it's showing is that there's actually a trend here. And you can see it was actually pretty darn accurate. It pegged this trend starting right about there. So having seen the prices rally here, you should have been a little bit more bullish. You could have bought in on any of these bars, and you can see you would have done reasonably well. Your Raptor, Hawk, Falcon, Eagle, all would have produced a buyable signal through here. I want to find a bit of a downtrend though, just so you can see that what I mean about it being non-directional. We do have a downtrend here somewhere, don't we? Well, you'll have to take my word for it. If the market is moving lower, which it is not at this point, but we're going to pretend, if prices were actually going this way, so long as there's a trend, your ADX will still be rising. All right, so that's something to bear in mind. It's non-directional. That throws people for a loop when they first start taking a look at it. And with all things trading related, like I say, if it helps you make a trading decision, then by all means, stay with it. Otherwise, you're probably better off ignoring it because more indicators are not the answer. All right, interesting here. We've got a number 1 signal, a number 3 signal, and a broad second push on that. We'll see now if we get any follow through on this signal. This is going to bring us back down toward the bottom end of the trading range, I believe. There we go, hopefully. Oh, Ray's running an ADX on his 8-tick Renko. So you can do it on your Renko bars as well. You don't need to use a time-based chart. And he said it just went into trend mode. Well, let's hope the trend is down. They traded just low enough to fill me, and now they're thinking about it. Oh, shoot. I guess I shouldn't have rushed into that trade. It just kind of caught it out of the corner of my eye, and I thought, oh, we're going to see a bearish break. Better get on board there. Well, we did get a bear break, a whole 1-tick bear break. And now we are back in this sideways trading range. Well, we're really in a bit of a sideways twist today. Again. No doubt the FOMC report has got the market on its heels. There is strong potential for a decent move to the short side. In fact, here comes our red bar, or pardon me, our green bar sell. Well, it's kind of a messed green bar sell, isn't it? Technically, the band was bullish at that point. All right, here we go with yet another number one signal and a second push. I will try to short them one more time. Nope. All right, let's put that away. They're not playing nice right now. Well, it could be a whole morning of just sideways trading here until they get outside that trading band. Not really, like I say, any follow through higher or lower. I may take a look, like I said, at doing another bracket here in a moment, maybe taking the market on a breakout higher or lower. But we have some very, very tight congestion. Here we are testing the bearish trend line now. We'll see if we get a breakout and a little bit of a pullback of sorts. Here's another number one signal. And there is my second push on that number one signal. The market really sticky here around this whole 68.80 zone. All right, they brought me in, and there's the low of the morning. I'm going to stretch it out here, see whether they're going to try to break the low of the morning. Or not the low of the morning, but low of opening range anyhow. Trade forecaster, look at that. In swing mode, moving into scalp mode. Okay, got my break even, and I'll move into parabolics now. Oh, maybe I'll let the parabolics take me out. Should I do that? Or should I just grab my profit where I have it? Where's the next line? Where's my median line? Oh, actually median line's up here. We'll be looking at the secondary support zone all the way down there at 68.30. That is a monster move, but that does bring us back into yesterday's trading range. Certainly not out of the question. Oh, they didn't quite give it to me, and they wouldn't have hit my profit target just yet either, so I'm not too terribly upset about that. I knew it was a lot to ask, but that's okay. That pretty much set off the earlier loss, so I'm all right with it. So if I were doing my 3 trade quota today, my day at this point would be done. So I've taken 3 trades, 2 profitable trades, 1 losing trade, but I'm finishing the day with a profit. That is so important. Using the 3 trade quota idea also helps you be very particular about your signals. That 1 losing trade that I took, you can see that I wasn't very particular about it, right? I kind of rushed into it. It was around here somewhere, yeah. I rushed into it, I took the trade, and then the market backed up on me. In hindsight, given the proximity to the lows back here, it was probably not the most prudent trade to take, at least not without a second push entry opportunity, which would have kept me out of that bad trade. You know, for another $15, I would have avoided the loss altogether. But my point is that I've made 3 trades, so I've met my trading quota. I'm still profitable on the day. Stop trading. You're not going to make more money trading more often. You're going to make more money by trading more contracts. And that's what a lot of people stumble over when they're trading, is they end up trading too much, too often, and then they wonder why they can't make any money. Now, I won't close the room up just yet, but I wanted to emphasize the point because it is an important point, and like I said, one that most traders never grasp. Now, if you're looking for another opportunity, it looks like we're getting a hard edge bounce. Not quite to the hard edge, but a hard edge bounce all the same. And here we go with our little bit of a second push opportunity. So this is visually a hard edge bounce. You can see technically the market didn't get high enough to engage the hard edge of that trading band, but that's what it is. It is still a hard edge bounce, and here a rather drawn out second push entry. But the whole idea behind the second push entry is that it keeps you on the right side of the market. Like it won't bring you in unless there's actually some momentum there. This could be now a number 2 signal as we've got ourselves a 2-3-2 type formation. I'm not going to buy it, but the way the market's been behaving today, it may not be a bad play. Geiger counter is green. Oh, here, what the heck. So we've got ourselves a 2-3-2 type signal. The 2-3-2 simply means that we see the reverse signal, then we see the with trend signal, and then we see the reverse signal again. Now, only this number 2 is printed. This number 2 did not print, obviously, but it is a number 2 signal. It is a retest of the lows, and from there, we've ended up producing a buy signal. That's what constitutes a counter trend signal. Did they slip me? No, didn't slip me. Now, counter trend signals are always dicey. Oh, see, and here we come now with the number 3 signal. And the thing I dislike most about counter trend signals is that they always block you from taking the with trend signal, which looks like it's going to head lower at this point. Oh, yeah, the Geiger counter is just buried there, so we've definitely got some bullish orders coming through, or pardon me, bearish orders coming through. Antonio asking, Eric, any news on the money management for Ninja 8? Yes, next couple of weeks I will have something on the website for you. It's not the trade manager. The programmer is still having the issues with the trade manager. However, we have developed a piece of software called we're calling it the trade calculator. It's an indicator-based trade manager type. So it does not rely on the strategies, the Ninja strategies. That's where all the problem is the programming in a strategy versus an indicator. Everything you see on the chart here is an indicator. The things here in the right margin are a strategy, and they behave differently. But yes, look for more information on that in the next couple of weeks. All right, get up there. Antonio's asking, is it going to have the ATR feature? We're working on a solution for that as well. All right, so there you see the evils of attempting counter-trend trades when there's actually something semi-resembling a trend. Always stay with the trend if you can. After all, the trend is your friend. All right. So decent follow through off that number 3 signal. Well, decent for today. Low enough to find your profit target anyway. Yeah, Antonio says the ATR line seems to be very accurate. You know, the ATR stands for average true range, and it's an approximation of what the true market price range is. Now, you can actually do an ATR above and below, but that's a different story. But a lot of these strategies, such as super trend or chandelier, these are all ATR based strategies. And what they do is we very often will use them as a stop strategy, but they can also be used as a entry strategy. In fact, these 3 here, parabolics, super trend, and chandelier, are what are called an always in strategy. So you're always in the market. You're either short or you're long. And the idea is when price breaks, it's bullish, you buy. When it breaks, it's bearish, you sell. Now you can see it works really well when the market has something resembling a trend, but how you just get killed when the market is moving sideways. Right? You would buy here, you get stopped out here. You short here, you get stopped out here. You buy here, and then you get, sorry, my computer. You buy here, and then you get stopped out here. So you would just get ripped up during this phase right here. But when it's trending, it works pretty well. Well, the ATR, they're all, except for parabolics, they're all ATR based. They all use ATR as their generation. So yeah, in that sense, they can, in the sense that we use it as a signal confirmation, it can be very helpful to keep you on the right side of the market. So here we've got the number 1 signal, everything's in sync, makes it a more probable buy, to be sure. Keith says, Eric, I love it when you talk trading psychology. It's a refresher for me to keep those things on the forefront. It you know, trading psychology, it is important. A lot of people don't give much thought to their trading psychology. All right, we got a number one signal here with a second push. Ooh, and a little bit of slippage on that. But we should see a little bit of follow through here as we try to retest the high. Here we go. Come on, give me that little push so I can start to roll my stops up. Wow. All right. I'm going to bring my stops up here a little. I got two very, very weak swings. The best stop is still my original. But I'm afraid this may turn out to be a test of the extreme, which it looks as though it may have been. You can see what I mean too about how after you've met your trade quota, how you can get yourself into trouble if you just keep trading more, especially on these kinds of days where the market really doesn't seem to have a whole lot of follow through to it. You know, it would be different if we were in a strong rally day, either higher or lower. Those kinds of days, yeah, go ahead, take that fourth or even fifth signal. Chances are good you're going to get some follow through, but today, you can see how even just taking two extra trades could pretty much eliminate any profit that you would have posted. Muy importante, as they like to say in Mexico. And more of the back and forth. I don't know. You know, the trading band is in a real twist here. There we go with yet another number one signal. I think I might, consider, well, this is obviously a strong rally point down here at around this, looks like 68.60-ish. So a failure there will see the market head lower. No question about that. I'm not sure where I want to place a buy. But you can see right here, the market hit 68.62 and boom, straight up. So there's buyers right down there. And what will tend to happen if prices continue lower, buyers will start to pick it up early because people will be looking at this and saying, wow, there was a big rally off of 68.60. I'll buy in, and they'll usually start to buy early. This is how 50% retracements happen, or 68% retracements, and so on. Chances that the market will get all the way back down here before the buyers start to pick it up are a little bit more remote. Not impossible, mind you. Just not a fun day. I have a feeling, though, like I said earlier, the FOMC minutes are going to keep the market in a bit of a sideways twist until the minutes are released this afternoon. I have an appointment in the city this morning, so we may close up shop here a little bit earlier, maybe around the quarter to the hour mark. Back now toward the lows of opening range, another number 3 signal. This would be a slightly more aggressive entry. You can see there's been some respect here of the opening range. Look at the slippage. Look at the slippage. That was brutal. You're going to have to start using stop limit orders. Nobody's trading. So my entry was up here. I got filled down here. That's at least a full 3-point slip. That's huge for the NASDAQ. That doesn't happen for the NQ. All right, got the break even. Let's see if we can trickle low enough to find the profit target. We've been bouncing around so much I can't keep track if that's primary support or primary resistance. Okay, it's primary support. See if we can sneak a couple of extra dollars out of this. Almost there. Oh, man. Taking a little bit of a bounce off of the primary support. I guess I should have put my profit target there. Oh, whew, that was tough. All right, well, we snuck out one more decent trade. You can see this one slightly more with trend-ish. But I have a feeling as we get closer to the 68.60 zone. Oh, actually, I do have an order there. So this now the low of the morning, and we'll just watch it here. A breakout should lead to some follow through. The buyers should have tried to recover this a little bit earlier. And since they did not, it is likely that a breakout may have some follow through. But again, the slippage, just the pace of the bars, I think a lot of people are sitting on their hands right now. All right, everyone, I'm going to close up the room here this morning. If you have a question, please go ahead, type away. I will wait. Otherwise, I would recommend take the rest of the day off, unless you're really die hard and you want to wait for the FOMC release this afternoon. It's going to be really, really tough slogging from here on out. All right, gang, I will talk to you tomorrow. Bye for now.